CNBC TV 18 presents the AI Dialogues in association with IBM.
Hello and welcome to AI Dialogues, a CNBC TV 18 presentation in association with IBM. I'm Lata Venkatesh. Now, a lot has already been discussed regarding artificial intelligence's transformative potential, and we have consistently sought to bring diverse perspectives to the conversation on AI. Today, we take a deep dive into the critical aspect of responsible AI, from risk to trust, exploring how organizations are navigating this delicate balance. As AI continues to revolutionize the financial landscape, this transformative technology is reshaping how we approach compliance, how we manage risks, and build customer trust. Yet, the journey from risk to trust is neither simple nor straightforward. It's not just about innovation, it's about building systems that are equitable, transparent, secure, and resilient in the face of evolving challenges. From fostering customer confidence and meeting regulatory expectations to ensuring operational scalability, the stakes are high and the path demands precision and foresight. Our panel of industry leaders today will shed light on how they are leveraging artificial intelligence to lead this shift responsibly, addressing biases, strengthening governance, and preparing for heightened global scrutiny. Together, we will uncover the strategies, challenges, and the opportunities that define responsible AI in this new era. Joining me today in this discussion are four industry stalwarts: Yogesh Garg, the Chief Digital Officer, Kotak Mahindra Bank; Tushar Patankar, the Chief Risk Officer at Yes Bank; Amit Talgeri, the Group Chief Risk Officer at Axis Bank; Dinesh Vijaykumar, General Counsel, IBM India. Gentlemen, thank you very much for joining me in what I think is a seminal conversation. Well, Yogesh, let me start with you. Now, at Kotak Mahindra Bank, if you can give me instances where you have already applied AI. Just give us some concrete instances so that we lay people understand.
Thanks for having me here. Excited to be here and share what we are doing or working on in Kotak, specifically on the AI space. So right now, the first use cases that we are prioritizing, it's about employees, right? So how can we make their jobs easier to take good care of our customers, right? So they don't have to go through like multiple systems, figuring out, diving deep into the processes, notes, SOPs, and whatnot. So that is like the goal number one. The second piece is around hyper-personalization. So how can we produce information that is relevant to customers and not, something that is irrelevant? So there are building blocks that we are focusing on and building. The third aspect or the use case for AI is around the risk management, working on the ML models that can predict, how we can minimize the risks for the company and also, make that process of approval faster for our customers.
Okay. Tushar, can you make it a little more micro? I mean, is there a specific instance where you'll have applied, and you're the Chief Risk Officer, so is your credit committee able to take some decision more easily because of what you have developed for them?
Thanks for calling me here. To begin with, I think when one needs to understand that banking is highly regulated, right? So, and AI is an exciting space to be in, but it's yet to be tested in its entirety. So, what we've decided at Yes Bank is not to jump into it headlong and try to automate or use AI completely all over the place. And RBI also has certain rules regarding credit decisioning on automation of credit decisioning, because RBI's logic is very simple. If you're using it for credit decisioning, you need to explain how you reached that decision, what went into taking the decision, and not all AI or ML models you will be able to reach that conclusion because they keep changing based on the data which goes through it. So today we don't use AI for decision making, but we definitely use AI in different parts of the bank. One is we use AI on the propensity models, propensity on what a customer could buy from us, customer on how we can target a customer, what's the likely, and then we make a hyper personalization of the offer that we can generate for that customer, depending which part of the country or what his needs are and what we've seen at our end based on the data which is available. The
So
second,
basically, if you get, say, a home loan customer, you check what more you can.
I will check what more I can do. I will check what will excite him for the home loan with me, right? So because as Yes Bank, I'm not the cheapest provider in the market, right? So I need to do something which is different. So I will try and hyper personalize my offer for him, which might not be as price competitive like the larger banks in the country, but maybe faster on something else. I may give him a little more leeway depending on what his likely needs are.
So, Amit, if you can tell us, what are the specific instances that you have been able to reduce risk, say?
So, first of all, thank you for having me here. First of all, in terms of credit risk models, if you see a large part of retail lending today is happening basis models. These models use multiple parameters, and more importantly, we use information which is both internal and external before deciding a loan. So one of the reasons why models have been very prolific today is because they allow you to take decisions faster, quicker. You have 10-second loans, you have 1-minute loans and all of that. But the bad side of it is to ensure that you are also ensuring responsible usage of those models. So the whole AI in terms of both building of the models and validation of the models becomes equally important. So from a risk point of view, one, do we have the right model when we are lending? And especially in the retail environment where you're dealing with mass customers and multiple profiles is one use case that we have. The second is in terms of the validation of those models to ensure that we don't have biases around those models. We are ensuring that the diversity of the customer profiles that we have in the country are all, in a sense, tried to capture in those models. So we've used AI in a lot of these model builds and the model validation as well. The other is on normal digital transactions, the digital frauds which are happening. The way those transactions are happening. Are you doing a lot of recharges today, which are very different from your normal payment patterns? Are you doing transactions which are not consistent with the profile that you had, submitted to the bank at the time you opened the account? There are scenario building that we are actually doing to ensure that the right customers get captured in terms of giving the right messages as well. So these are two use cases from a risk mitigation point of view.
CNBC TV 18 presents the AI Dialogues in association with IBM.